You know what time it is? It is growth stock time for August 2021, and markets are at all-time highs. You got the S&P 500 at all-time highs. You got the NASDAQ roaring. Don't be freaking out. This is the time to be looking for great growth stocks. And I know there's a lot of volatility. Stuff is bouncing around, but look, don't lose focus. Use volatility as an opportunity. Hey, I'm Luke Downey. I am co-founder of mapsignals.com. We don't follow the news, we follow the big money, because that is how you can find outlier stocks. And outlier stocks, those are the ones that continue to go up over time, and they just make all of the returns for the markets. They have three characteristics that we like to look for. Number one, they have great technicals. And the only technical that you need to be worried about is, what is that chart doing over time? If it's going straight up, that means is likely an outlier. Number two is you need to be looking at great fundamentals. And some of the simplest things that we look at is, are the revenues growing year after year? Are the earnings growing year after year? And why do we look for that? Is because if their revenues and earnings are growing, then most likely they'll be able to pay out dividends to their shareholders at some point in the future, right? That's what investing is all about, getting a return on your investment. And then number three, how do you find companies that have these characteristics? Well, the way that we found is we follow the big money. And so we are looking for when institutions are likely piling into stocks, and they usually find the best ones out there. And that's what we do at mapsignals.com. So without further ado, why don't we go ahead and get into our first growth stock. So I'm going to share my screen. I'm going to pull up something for us to look at right here. And the number one stock that we're going to be looking at is Fortinet. This is a cybersecurity firm. People are always worried about, a breach here, a breach there. Well, Fortinet has been one of the highest performing cybersecurity firms that we've had for years. And these are just those big money signals. That's where the big money. So big money was coming out of Fortinet earlier, late last year. But year to date, it has been a one-way train to heaven. And if you go back further, and I don't like to just look at 1 year, I want to look at multi-years. We have a really cool ranking process that profiles the best stocks in our research on a given week. And if they are special, they make one of these blue bars. And Fortinet, you hate to play favorites, but that is the stairway to heaven. I mean, that is how many times this stock was showcased as a potential buy. And that is incredible. And, look, don't just look at the chart. Let's go ahead and look at some other characteristics that are just as important than the chart. So let's look at Fortinet, the sector that it's in technology. The share price is just about 256 bucks. It's about a $42 billion market cap. So it's not tiny by any means. For 1 month, it's up about 11%. Year to date, it's up about 73%. And then remember those big money signals that I showed you, those green signals? Has had 18 of those in 2021. But even more impressive is when you go back to 2015, right? You look at all of these blue signals, right? That makes this stock special. 59 times since 2015, Fortinet has been a top stock. Okay. That's like that's the buy report. That's where the juice is found 59 times. It can't be a fluke. And then what about the earnings growth? Just in 3 years, its earnings growth is about 348%. Wham, bam, thank you, ma'am. You don't have to get creative whenever you're looking for great stocks. Just keep it very simple, just like we do. Look at those few characteristics, and a lot of times you can uncover some great companies, but you got to hold them. So let's go ahead and get to our number two growth stock that we have for today. And you know what? It's not going to be a tiny stock. It's going to be one of the biggest companies in the world, and that's Amazon.com. And so on the 1 year chart, if you just look at it, it's kind of been bobbing and weaving. It hasn't really been doing much. It had some buying here, a little bit here, then there was some selling, and then back to buying. But again, most people that follow the market, they know that Amazon is a great stock. And how do we know that? We can look since 2015, how many times was it a high ranking stock? That means it was firing on all cylinders. And you can see it has been dozens of times. And so that's the main thing that you want to look for when you're looking for a great stock. And Amazon just continues to show at the top of that ranking process. But let's look under the hood to make sure that the fundamental picture actually makes sense. And so look, it's a staples company. I mean, they basically do everything, right? They've got AWS, anything that you want to buy practically online, you go to Amazon.com. So it basically is a utility at this point. The share price is just over $3,700 per share. The market cap is 1.87 trillion. So, I mean, this is just a monster company. But in 1 month, it's up about 10%. And year to date, it's up about 14%. So we like that. We like, companies that are continuing to go up on these different time frames. The big money signals year to date, it's had 10 of those just where the stock was going up with big money love. But the most important thing to finding an outlier stock is how many times has it been on our top 20 report? And since 2015, 32 times. Okay, that is not a fluke. It doesn't pay a dividend, and probably most important to why the big money loves this stock year after year is the earnings growth. It's growing earnings on a 3-year basis at just over 100%, 107.5%. A company of this size, that's just destroying it. Okay, and very few companies can keep at that pace, and Amazon is doing it, and it's almost a $2 trillion company. And for that reason, keep that one on your radar. That is just a great, great company. So let's go ahead and get to our number 3 stock, Paycom. Paycom. So, I mean, look, you start to think about the reopen, right? And there's going to be some HR needs, some payroll needs. Who do you turn to? You go to Paycom. Now, I chose Paycom as our number 3 stock because it hasn't really been doing much recently. And I think that's a great opportunity, because whenever this stock does get the love, it's probably going to be going up, and away. And historically, you can see that it is a big money favorite. So going back to 2015, this stock just kept showing all of those big money signals. And when you see dozens and dozens of signals like that, typically, if a stock is in a lull like Paycom is right now, once it breaks out to a certain threshold, or there's a new growth metric that the big money is going to be chasing, Paycom is probably going to be one of those prime targets. And so that's why I have it as our number 3 stock. But again, we need to go look under the hood a little bit. Let's understand why the big money might like Paycom over these past few years. So it's a technology stock. Share price is about $380. The market cap is just under $23 billion. So it's not that small, but it's also not that big, which is nice. On a 1-month basis, it's up 12.5%. Year to date, though, it's down about 15%. So again, sometimes pullbacks are an opportunity, especially with high growth stocks. Big money year to date, it's had 0 buy signals. So again, it's just in a lull. But if you look back to 2015, 55 times it was on that buy report. That makes it an outlier. Of course, company growing this much, they're not going to be paying a dividend, but their 3-year earnings growth rate is just about 40%. And that is monstrous. That is what you want to see. It's a great name. Keep that one on your radar. And that brings us to number 4, which, got to be honest, this used to be my favorite stock of all time. This was, it's the Trade Desk. It's TTD, man. I used to tell everyone that I could about this stock because it just kept blowing away earnings, guiding higher, and the big money loved it. Now, on a 1-year basis, the stock looks pretty volatile, right? Because late last year, it got some love, went to all-time highs, then it started to fall. People got worried about things that Google was changing as far as advertising is going on. And so that greatly affected the price of TTD. But I think a lot of people are thinking that those fears are overblown. And so you're starting to see buyers come back in and scoop it when it was low. But again, we need to go all the way back. And they started trading in, looks like 2017, maybe late 2016. But look at all the big money. I mean, we've been following this stock since it was, oh my God. So it had a 10-for-1 stock split. And I'm looking at it. So it's a $3 stock. So it was about $30 or $40 when we started looking at it. But since it had that 10-for-1 split, it's, $3 or $4. So again, this is just all that you need to see, the stairway to heaven. I mean, that is, you get one of these types of stocks in your portfolio and you are a blessed investor. You know, you don't have to have like 10 of these outliers. You know, it only takes one to really transform a portfolio. But again, we need to look under the hood. Does TTD have the seeds of greatness, right? So it's a discretionary name, right? They're dealing with marketing and online advertising. Share price is just about 78 bucks. The market cap is 37 billion. So this is a really nice size mid-cap company, I'd probably say, growing like a weed. In 1 month, the stock has shot up just about 30%. And year to date, it's basically flat. So as the market's been going up, this one has definitely underperformed on a year to date basis. But on a multi-year time frame, this stock has been just a dominant name. And so for the big money signals year to date, it's only had 2 of those. But if we look back to 2015, how many times has this stock been a rock star, right? Been just like one of the top rated names 37 times, okay? That is not a fluke. That makes it an outlier. And you can see why. Why would big money be buying a stock like this? It is because look at the 3-year earnings growth. You know, big money chases earnings. That is what they want. That is what determines the value of a stock over the long term. And their 3-year earnings growth rate is just about 66%. That is just cranking. So look, again, focus on quality, because whenever you do, it weeds out the number of stocks that you're going to be looking at. And that's the process that we follow. And the last one that we're going to go over is another stalwart. This is a newer name. A lot of you guys are going to be familiar with this, and that is Zoom Video Communications. And you want to talk about a beast of a growth stock. This is a beast. So looking at 1 year, you can see there was a lot of juice going into this stock late last year. That's kind of when a lot of the growth stocks had their, all-time highs, and then they just fell. So they started worrying about growth. You remember that growth scare that happened earlier this year? People were worried that, growth was over, and they got all into the reopen and everything like that. Well, Zoom fell victim to that big rotation. But what you're starting to see recently right now is rates go back down. People are turning to growth, and they're looking at high quality growth. But let's go ahead and look back to 2015. But this stock has only been trading for a couple of years, since 2019, and it has some of those seeds of greatness, the stairway to heaven. So this is just a great company. And when you look under the hood, it gets even better, because it's one thing to have big money. It's another thing to just have the fundamental characteristics that you really want to see. So it's a technology stock. The share price is just about 380 bucks. Market cap is about 112 billion. For 1 month, it's up just over 5%. Year to date, it's roughly flat. And the big money signals year to date, the buy signals only, there was 5 of them. But if we go back to 2015, it's really 2019, because it's only been trading for a couple of years. 8 times it's been on that rare top 20 report. So it's not yet an outlier, but it does have some of the things that I believe are going to make it an outlier in the years to come. Namely, that is because the 3-year earnings growth has been just over 2,400%. Now, obviously, the pandemic had something to do with that. And that's what's really important, is understanding, these companies early in their life cycle, what they're probably going to be doing in the future. Are they going to earn as much money like that at that type of growth rate? Definitely not. That trajectory is going to slow. But a company that is this profitable, they've got a great business, they've got a great moat. I think that is a great forward for this stock. And so if we just look at what's going on, the market's at all-time highs. You got growth stocks, they're all breaking out. Be focused on quality. I think these 5 names are really good ones that you could be looking at for potential long-term holds, which, by the way, I am long Zoom and managed accounts. I forgot to mention that. But again, these are all wonderful companies. So I'd love to hear which growth companies you guys are looking at for August of 2021. I'll see you next time.